We are now live, so hello and welcome to those of you joining just a few minutes early. My name is Charlotte. I'll be your Money Show host for this session. I have Louis here with me in the Zoom room, ready to begin on time at 4:30 p.m. That is Eastern Time, coming up again in just a few short minutes. Thank you all so much for your patience, and I hope you've enjoyed the show so far.
Hi, everybody. It's Louis Navalier. Thank you for joining us today. There's a lot of exciting things happening with the market that I'll get into, but the annual Russell realignment is a big deal. Actually, this year we're going to have one in November as well. And what Russell does is they add a lot of the up and coming stocks to their 2000 and 1000 indices. And they announce these lists every Friday. They've already had a couple announcements, and the actual change will be on Monday, July 29th. But I remember one year our small cap stock surged on average 6.9% one day, and that was half our performance that year. That was a few decades ago. But nonetheless, the annual Russell realignment does get a lot of excitement around small cap stocks. And so I just want to explain what's going on and give you my favorite stocks here. So let's talk about this. This is technically called a Russell reconstitution, and they do they started in April listing the preliminary stocks, and they refine it every Friday, and then the actual change will take effect. Well, it says June 26th after the market closed, but effectively on Monday the 29th, a lot of stocks will gap up. And this is a big deal, and the exhibit down below just shows you how many stocks are about to be reshuffled. As you may know, Wall Street doesn't have a lot of liquidity, not a lot of inventory, and Russell's tries to do this over time to reduce their impact on the stocks. But nonetheless, because so much money on Wall Street is index or tied to what they call tracking managers that are forced to follow a benchmark, the buying pressure at the end of the month is going to be relentless, and June's usually a very good month for small cap stocks. And so again, it happens in late June. The Russell 2000 will probably have the biggest pop, but the ones that are going up in market cap go in the Russell 1000, and then of course the 1000, 2000 are the Russell 3000 index. So this is going to be a lot of fun, folks, and June is usually a very good month for this event. I do want you to know the small mid-cap stocks are undervalued relative to the bigger stocks. The other thing is they're much more domestic. And what I mean by that is that most of their sales come from the US. Half the S&P sales, on the other hand, come from multinationals. And, our economy is very good in the US. It's sputtering elsewhere. Canada's in a recession. Japan just lost 3 million people. A lot of countries are shrinking in population due to demographic problems. And the only real countries that are growing in population are the US and India. And but then, of course, we are also growth through immigration. Obviously, Trump wants them legal. And but even in a country like Canada, they continue to shrink despite their open immigration policies. So you get to buy these more powerful domestic stocks at a discount on a valuation basis. So I'm very, very excited about the values now in small cap and the reconstitution. We have a lot of good economic news. I was on Fox News in mid-December saying that we'd have 5% GDP growth this year. Then Howard Lutnick went up and said, no, we'll actually hit 6%. I actually saw Howard at Mar-a-Lago. I had a chat with him. Our kids went to school together, so we know each other. Anyway, we'll probably hit that in the third quarter. But right now, this quarter is tracking pretty good. The Atlanta Fed only has us up 3%. But the GDP growth, just so you know, is coming from this manufacturing resurgence, which is the strongest since 2022. It's gone up for 5 straight months. There's a lot of onshoring going on. The other thing that's happening, of course, is we are exporting a lot of energy around the world, and that's shrinking the trade deficit. And then we have a lot of productivity enhancements. A lot of that's tied to AI and because the AI and productivity gains are non-inflationary. Now that's really going to be up to Kevin Hassler, our new Fed chairman, to Kevin Warsh, I'm sorry, Kevin Warsh, to get the other FOMC members to get excited about. Kevin Hassler, just so you know, is head of the Council of Economic Advisors. Very happy fellow. So I'm pretty excited, and I think Wall Street's excited. You've seen how good the earnings season was. Our earnings are forecast to be up 21.5 this year on the S&P. The last earnings came out with the strongest in 7 years. Revisions were the strongest in 5 years. And even now, as earnings season winds down, we're getting big analyst revisions. So very healthy environment we're in. Oh yeah, this is the Atlanta Fed GDP growth. They'll revise this, but you know, the third quarter GDP will cross over 5, might touch 6. So there's a big fear of missing out trade underway. The only issue is you got to be in the data centers and the AI related stocks. That's where all the spectacular growth is. That's over 45% of my portfolios. I've actually doubled down on more of them. You saw that today in Hewlett Packard. The other day it was Dell. You know, the AI order backlog is 3 years now. So, and that's represents over half the construction in America. So this is getting to be a big deal. So a lot of people want to be on these FOMO trades, and one of them's our president. You know, it was disclosed that he actually owns a lot of my stocks. So I'm very honored by that, and that's going to help ensure that they'll do well. Now, just so you know, pretty much everybody was on Air Force One that went to China. He owned stocks. So going to be interesting here. So yeah, we're doubling down on AI, and our friends at Bespoke have done some great charts showing that the internet boom in the 90s and the AI boom now, and how lockstep the market is. So we think this year is going to be the best year since 1999, which was my best year ever. So I had a couple of portfolios up over 100% that year. This year we're already up over 40%. So we're off to a very, very strong start, and I do expect to make another 30 to 40% by the end of the year. So we're having fun. I hope you are, and a lot of it's really these data centers. Now, the big news today was this guy, Mr. Left, Andrew Left. He was convicted, and he used to lead Citron Research. And I got to tell you, I'm kind of relieved this happened. You know, Citron attacked a couple of my stocks. One was Super Microcomputer with bogus allegations. I never sold the stock. I'm up several 100% in it. Another one was Sezzle. So when the stocks would go parabolic, he would try to prick that bubble with innuendo and things. The main reason I never sold these stocks, even though they got volatile thanks to Citron, is there were no analyst cuts. So I don't panic as long as the analyst community is not panicking. But Andrew was an opportunistic trader, and he did some things he shouldn't have done, and might have to go to jail now. Obviously, he's going to appeal this for now. So we got a lot of things, good things going on. The annual Russell realignment is good. It'll help the breadth and power of the market spread out. Small caps are at a historic discount. They are poised to surge. One, they're more domestic. Domestic economy is better than international economy, and then of course they're undervalued. We just had a great manufacturing report. And we'll get to ISM services tomorrow. Some other good news, durable goods tomorrow. But people are doubling down. The 3-year order backlog for the data centers is unbelievable. And it's when these companies announce and guide higher, everybody wants to know just how big is your order backlog. And the short sellers as a group are probably going away for a while because they're scared. One of the things that goes on, Berkeley Law School has a thing they used to do called Fraud Fest, and that Buddy Waters would do. And I think things like that are going to be highly controversial, alleging fraud and stuff like that. You know, the accounting industry is pretty proud of itself and doesn't want fraud. So I think most of the short sellers is going to go into hiding for a while, and that's going to allow the market to rally even more. So my research is online, available to you free. This is our stock grader. We grade stocks on an A, B, C, D, and F basis, and we want you to take advantage of it. We also have a great 8-factor fundamental model. We look at margin expansion, sales growth, earnings stability, earnings momentum, earnings surprises, analysis revisions, cash flow, and return on equity. The stocks that score the highest in this model typically do the best. One of them happens to be Supermicro, which was that stock that Citron attacked. And Citron's out of business now, but that's why I never sold the stock. I'm just following the fundamentals. And well, I'm very proud of our stock rating. Now, we backtest what works on Wall Street. This is the backtest in February. We're finalizing the one at the end of May now. But essentially, you got to be in the top 10%, the top 2 bar graphs on the left to do the best. The bar graph on the right is our fundamental model. And there you got to be in the top 6 bar graphs, top 30%. But the reason we're having a blowout year and last year's blowout is the models are tight, they're narrow, and the money's just flowing into a few stocks. It's just like a garden hose. You can set it on blast, a narrow stream, or you can set it on wide, water the daffodils or something. But yeah, we're on the money that's coming to market is chasing very few stocks now, and that's why you have to use our stock grader to help find them. Okay, this is a movie my daughter did showing how our stock grader works. Those are our F-rated stocks, which are sales, strong sales. This is our D-rated stocks, which are also sales. These are the C-rated stocks, which are holds, hold seasons with loans. These are B-rated stocks, which are buys. These are our A-grade stocks, which are strong buys. And these are our fundamental stocks, which are stocks in the top 20% of the 8-factor model. These are extraordinary. And that's what the S&P has done. So we don't want you to index, we just want you on the creme de la creme, and we want you to use our stock grader. And that's the chart of our fundamental models. They're exceptionally well. And you got a stock grader on InvestorPlace here. Okay. Now we do have some newsletters here to show you. And this is my breakthrough stock letter. This is my small mid cap. And the ones I'm circling are some of the big gains we've had. You can see we made a lot of money in Idaho Strategic, which is a rare earth stock and gold miner. We made a lot, it's over 700% in Supermicro. That's NVIDIA's one of NVIDIA's biggest customers to make the best water-cooled rack systems. TTM Technologies, almost 300%. Bloom Energy are natural gas fuel cells for the data centers, big deal. Huge winner. Sezzle's the other stock we talked about that the short sale is attacked. Argan is data center related. Then we have Carpenter Technology and Celestica. See, those are both up here 700%. We have Construction Partners, engineering firm, helps with data centers, although mostly highway construction. Wilden Group, a big government contractor, and Woodward. So you can see we not only do we have good returns, we have pretty good batting average. There's only one loser at this moment. Okay, there are actually 2 losers. So our job is to compound the hell out of your money, and you can see our average conservative stocks up 174. Our average model aggressive is up 173, and our average aggressive stocks up 549. This is my growth investor letter. This is the letter most people start with. These are blue chip stocks. We've highlighted some of the better stocks here. Celestica is also in this letter, but it's on the other letter too. But Micron is up 152. Micron hasn't announced yet. Their sales will be up 256. Earnings will be up over 900. We got Seagate 292. We got Vertiv Holding up 375. We have Bloom Energy here too. And then let's see, Carpenter Tech, MCore. A lot of these are data centers. Comfort Systems data centers. Howmet Aerospace is, you know, for rockets and they make titanium and all kinds of stuff for the military and aerospace. NVIDIA, we're proud to be up over 5,000%. This is our second time in NVIDIA. We've been in it before. And quantum services with data centers. But this is our conservative stocks. You can see the conservative returns are up 296. Mildly aggressive returns on average up 116 and aggressive 107. Again, very few losers on this ladder. We did sell InterDigital, which we were underwater in. Ubiquity, we're holding, we're waiting for another earnings season. But very high batting average. You had a lot of home runs. And then the main thing is we want you guys to use our databases. Go to navilargrowth.com, my newsletter site. Sign up for Market 360. Take advantage of our newsletters, our stock rater. If you like, start with a letter. Growth Investors only $49. They have specials and stuff, but it's usually only $49. And once you start with Growth Investor, then we have more aggressive letters you can buy. But I am honored to talk to you, and I'm here to empower you, make you rich. One little thing about getting rich is it's very important to have long-term capital gains. You can see I'm got embedded capital gains in a lot of these stocks. The other thing that you should know about me is we eat our own cooking. Everything we recommend, we own. We do have a family office that we manage $1.5 billion. So we're very serious about what we do. We are here to get you rich. You know, it's interesting. There's a Wall Street Journal article today about Ron Barron, who's a very successful fund manager. And he's very in the news now because he bought SpaceX when it was private for his fund, and one fund's up to almost 30%. And then he has another 19% in Tesla. So he's got almost half the fund in Elon Musk. But he's doing very poorly this year. The Wall Street Journal pointed that out. One fund's down almost 10%. Others are lagging the benchmarks. So he missed the AI craze. And our system is designed to find money flow. This whole stock rater system is, it didn't get into a lot of details, but we go for high alpha stocks. Stocks are moving independent of the market. Alpha divided volatility is my top secret quant screen. And that helps me identify the buying pressure. Then I run them through that 8-factor fundamental model to data mine and find the creme de la creme. There's actually 1,200 A-rated stocks, but I'm only buying about 80 after the deep fundamental dive. And we go to wherever we can find opportunities. So in addition to data centers, we got a bunch of oil tanker stocks because of the disruption in Strait of Hormuz. President Trump told everybody if they want oil, just come to America and get it. We got plenty. We have over 20 gold stocks. The main reason is central banks have been voracious buyers of gold. The gold stocks going to have record earnings for 3 more quarters. A good example why they own gold is when yields back up, there's something called bond vigilante that's making yields in Japan, Britain, and even France go up. When bonds go up, their central banks can lose money on their operations. And that happened with the French central bank. So the French central bank had to take profits from its gold reserves to balance its books. And so even though the foreign central banks own $9.5 trillion of U.S. treasuries, they own more gold. So I'm not a gold bug. I'm just watching the money flow, and the central banks are struggling. You know, it's kind of hard to run a country when your population shrinks like it has in Japan or Britain or France. Basically, it's shrinking everywhere except the U.S., India, and Portugal and Spain are growing from the immigration. But then when you let them in, you got to assimilate them and make sure they're successful people and pay into the system. So some countries like Britain, you know, they don't even, people aren't paying in the system anymore. And, you know, half the Brits have to be subsidized on electricity. So this has gotten to be a very interesting conundrum around the world. And, you know, President Trump went to Davos, Switzerland. They basically said, hey, you've been doing it wrong. You want to be successful, you better call America. And he's right. That was so shocking that Davos isn't going to be in Davos anymore. So I think it's moving to Dublin. And, you know, the European Union fights us on our tech. They have something called the Digital Service Act. They want to fine us. They want our software to be open. Right now it's closed. And So, we're at war with the European Union on this, and a lot of the tech companies ran at Trump for protection. Um, and you can also see what he's doing with Iran. He's now fighting an economic war. You can blow things up and stuff, but we already did that, and you still have to respond if they threaten our navy. But he's basically cutting off the oil and choking Iran. And it's unfortunate the IRGC in Iran sort money from their own people, kind of like the Cuban military does too. And you want all these countries to be assimilated with the world, but right now they got these dictators dominating things. And even though the Israel's killing a lot of the IRGC heads, it's kind of like whack-a-mole. But the market doesn't even care about that because it doesn't affect us. It affects Australia, affects India, affects China. Even China had a run to the US to spur its growth on. That was part of that trip when Trump went over there with companies. That was a Chamber of Commerce meeting. So that's who we are, what we do. I hope you feel empowered. I hope you realize that that if you use our stock grader, you can just compound your money at a good clip. These are real returns we showed you, real newsletters. I've been at this 47 years. And if you want to get rich, just follow us and put you on the right track. This is going to go down as a year like 99, if not better. The earnings are unbelievable and the backlogs are unbelievable. So I'm very, very bullish on America. I'm bullish on our stocks. And I hope you're having fun. And we do have some time for questions. So I'm going to take a few here. Here's a good question. What's the difference between me and an index fund? Well, that's a great question. When you index, you're forced to buy whatever's in the index. And there's something called tracking manager out there where a lot of managers are just closet indexers. I don't believe in indexing. I'm from Berkeley, California. I used to build index products. And that's how I stumbled across this system. I found there were anomalies and efficiencies in the market. But because I'm from Berkeley, I was taught that we're not supposed to out earn our neighbors. We create social unrest. So for social peace and harmony, we're going to index blindly. And I don't buy that. I don't believe in that. Okay. So, and I'm here to prove that indexing doesn't work, because if it did, I wouldn't have my stock trader doing so well. I wouldn't have such a good record. So, so that's that. So if you are a socialist and you feel guilty about making money, yeah, go ahead and index. Okay. But no offense, I think that makes you a loser. Okay. Here's another good question. Do you have any financials? No, I don't. I'm an ex-bank analyst. I used to take two losing banks and savings loans in the late 70s, early 80s. I could merge them together. And they made money when I was done with them. Essentially, I took the big one, merged it in the small one, re-amortized the loans. I was basically deferring their problems to another day. I was helping them get FDIC or FSLIC insurance. It's that experience scarred me for life, so you never see me in financials. Just so you're aware, the banking industry has changed. They passed something called Dodd-Frank, made lending impossible unless your credit score is perfect. So a private credit industry emerged. It's over $3 trillion. So you can get an 11% yield now. You go to any stockbroker, and they have private credit funds that yield you over 11. They're leveraging loans to get you that 11% yield. Very popular product because it pays the financial advisor 1.5% of your annual growth. There's been some defaults in that area. They haven't passed on to the clients yet. They're probably going to have to lower the yields eventually. But Wall Street is so busy selling private credit, they forgot to sell stocks. And I was on a show called The Market Insider. This was Simic, he's an Epoch Times guy. And I was trying to explain to him that if a stockbroker has $100 million in private credit, they're making $1.5 million a year grossing. If they put them in a stock portfolio, they can't make more than 70 basis points or 0.7%. So they have to cut their pay in half. So what's happened is the brokerage firms aren't selling stocks like they used to because there's no way for them to get paid. They sell IPOs. The excitement over SpaceX is over the 60 billion in underwriting fees you're going to get. There's 21 firms underwriting SpaceX. And right, that's if it's $1 billion offering. If it goes up to $1.8 billion, they're going to go over 100 million. And so just because they're making money doesn't mean you should buy it. Okay. So I just want you, that's the main excitement. And so we really enjoy what we do. And we eat our own cooking. This is a labor of love. Everything we spend, we buy. I'm just here to compound your money as fast as you can. I'd like you to start with our free commentary on Market 360. I'd like you to sign up for Growth Investor. I'd like you to be a stock trader. I'd like you to save your portfolio. And you'll see me at the money shows. I'll be at the one in Vegas. This one in Dallas recently. So look forward to meeting you. And I hope you feel empowered. That's what I'm here to do. Here to empower you. Take care, everybody. See you now.
Thank you so much, Louis, for a great presentation. So glad that we could get you on here, even considering the travel changes that have come today. Now, to those of you watching us live, thank you as well for joining us. It's always a pleasure to have you here. We will be back tomorrow at 10:05 a.m. Eastern Time for another full day of sessions for you. So I hope you will tune back in then, as we'd love to see you. I hope everyone has a wonderful rest of your day. Take care.